When Sitharaman presented her fourth budget in February last year, the Omicron variant of the coronavirus was still raging on. As the third wave of the pandemic started to recede, the Russian invasion of Ukraine on February 24 came as a black swan event and fundamentally altered the global economic outlook.
The war has led to supply chain shocks and a significant increase in commodity prices, including fuel and fertilizer, thus bloating the government's subsidy expenditure. While India has benefited by sourcing cheaper crude oil from Russia, one has to see how the price cap by the G7 countries on Russian crude and subsequent restrictions on ship movements play out for India. Experts also raise concern on the impact of rising COVID cases in China and the growing geostrategic threat from India's northern neighbor.
Well, first of all, I think, with the kind of upsurge of COVID cases which is taking place in China, there is an apprehension that there may be a similar kind of a, upsurge across the world, not just India. And therefore, would that mean that, in India also, we should be prepared for perhaps another wave, which means that, the public health aspect has to be, taken into account in the budget. Secondly, there are also, threats with respect to security. And you have seen the kind of, activism that we have been witnessing at the India-China border. And that also means that certainly to my mind, there is no escape from committing ourselves to a larger defense budget for the next several years to come. And a start may have to be made by this budget itself.
The energy crisis and synchronized interest rate hikes in the developed world to fight record inflation have led to an economic recession in the UK, with the EU expected to follow suit soon. This has severely dented external demand for Indian goods. On the domestic front, while consumption is getting a boost from higher discretionary spending by the affluent upper middle class, overall consumption remains depressed. This is visible in the factory output figures. They show that the production of consumer goods has been contracting for more than a quarter now.
As the impact of higher interest rates kicks in next year, even credit growth, which has been growing in double digits for 9 consecutive months, may start to peter away. Without sufficient demand support from the lower middle income class and those in the bottom of the pyramid, economic growth may face significant headwinds in FY24. What can make matters worse is the languishing private investments, for which the government may need to keep the accelerator on public investment to support growth. I spoke to FICCI President Subrakant Pandey earlier on the budget. Here is what he has to say.
We expect it to be a growth-oriented budget, which focuses on the continuing revival from the pandemic and in fact take that forward. We expect focus on certain measures which will sort of go towards attracting further investment into India, especially global supply chains which are looking at a China plus one strategy once again.
With the general election approaching and increased chatter of high unemployment, the Prime Minister has directed all central government ministries and departments to identify vacancies and recruit 1 million by the end of 2023. This plan could well find iteration in the budget, with the government trying hard to change the perception on the job creation front. Since 5 large states, Karnataka, Chhattisgarh, Madhya Pradesh, Rajasthan and Telangana, will go to polls in 2023, the budget may also be high on politics and political correctness. Budget 2023 will also be presented when India has taken up the G20 presidency for the first time. Over the year-long presidency, the government will organize over 200 events at over 50 venues. The budget may have elements that portray India as a global leader on several fronts.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.